We also have Trinseo, which is a chemical company, warning on rising input costs. It reminds me of what PPG had said earlier this week.
Yep, and prior to that, Pepsi said it, ConAgra said it in their earnings announcements. I think this is the story of the season, and that is margin expectations were too high. Companies are coming in and guiding for margins to be a little bit lower than expected going forward, and margins historically have actually led to equity market weakness. So I think that margins are a big part of this story. The fact that we lost our sort of upward momentum on our margin expectations this summer was an early warning sign that the third quarter could be a little tougher than a lot of people were expecting. I do think ultimately margins over the course of the next year will be higher than they were over the course of the last year. But in the interim, companies do have to adjust. They have to adjust to higher input costs, higher commodity costs, accelerating operating expenditure, higher marketing expense, higher SG&A expense, higher wages. All of these things are getting noted in company reports. And so it's weighing a little bit on sentiment toward earnings. And frankly, in a market that is 100% powered by earnings because rates are moving higher, weighing on the multiple, it makes us very sensitive to these earnings news.
And this is really like the sum of all fears, because everything's fine, but he's like, oh, I'm worried about labor costs and tariffs and China. And these companies are like checking every box.
Yeah, and the problem is it's really comprehensive, and it's all kind of coming down on margins. Now, frankly, in an environment where you have 20% earnings growth, this is a fairly small concern in the grand scheme of things. But it is a bit of a shock in this current period. And over the last month, we have seen earnings expectations come down at double the pace of your average 1 month revision coming into an earnings season. So I think that some of this, what's happening in the market, in addition to China, in addition to the bond market weakness, is somewhat earnings related. And we have to absorb that before we can move on.
I do want to bring this. The NASDAQ is now down 4% on the day, with losses accelerating. Obviously, industrials see the margins shrinking, but there is a question on the broader level. How much is this just sheer panic, and how long can it continue from your perspective?
Oh, I think a lot of it is panic. I mean, the equity market, this is the equity market in a nutshell, right? It's sort of sell now, think later on downtrends, and ultimately it sort of washes its way through. I think a lot of this is related to what Abigail was talking about with China. There is a lot of fear with respect to China, with the microchip story, with now stories at the border, in addition to the tariff action that is impacting margins already. So I think there is a little bit of fear. How far will this go? And we'll obviously overprice to the downside. Usually that's how the equity market behaves. It overprices the risk and then starts to think about, what are the true risks.
The pendulum swings too far. Gina Martin-Adams sticking with us. We want to bring in now Jonathan Golub. He is Credit Suisse Chief U.S. Equity Strategist. And Jonathan, I'm going to point you towards a chart here that we showed earlier, which is the intraday chart of the S&P, Dow, and NASDAQ, and how it's been a steady deterioration. When you look at this chart, Jonathan, you've noted that it's actually kind of bullish.
Well, I spent the whole morning, or the day until I came on here, watching this tick down and looking for what you want to see is a break. It says at 10 o'clock or 2 o'clock, there was a piece of news that came out, and that's the smoking gun, and I can identify exactly what it was. But there's no point in time where the market says there was anything new here. So it was exactly what Gina was saying. This is just people saying, gosh, my neighbor's selling. I have no idea why. There's about a list as long as my leg on what the things could be. The Fed's saying that they're going to tighten more, and China's going to, we're never going to trade with China again, and earnings are going to fall off. And mind you, there's no new news here. It's just us literally just talking to each other. And that chart basically proves that there's no news today. And that, to me, means you're going to get this back. I don't know if it takes a day or a week. You're going to get this back. I would absolutely be buying this. If there was news that was driving this, I may panic, but this is no news.
Couldn't you say that on the way up? I mean, what do we know about Amazon today that we didn't know at the beginning of the year, other than that our neighbors were getting rich?
No, a lot. Amazon. I mean, how many Amazon packages do the five of us have now for in a month compared to a year or two ago? And I'm looking at Lisa Abramowicz, I'm thinking more. No, I'm sorry, but no, but it's the same thing is, and if you look at the companies that are involved in cloud computing, like Amazon. How much more are we moving to the cloud and data centers? More. So there is more. And their margins are actually, they're selling more profitably. So yes, that upward trend was on news. Today's downward trend, I'm not sure.
Gina, do you agree with Jonathan that this is a buy the dip moment?
I think it ultimately will be. Every fundamental model that we run says that stocks should be valued at a higher level than they are today. So I do think ultimately it will be a buy the dip moment. I, would respectfully decline to comment on exactly when that buy the dip is. If it's precisely right now.
Oh, come on,
it's a
throw
little
it
bit
out
too much
there.
pressure. But I will say that our fundamental models do say we should go higher. Technicals, we are testing some pretty critical levels right at 2,800 on the S&P 500. That tests the long-term uptrend that started back in 2016. It doesn't eliminate the longer-term bull market that's been going on from 2009, but a break of 2,800 is of consequence to me, and it would suggest that we might have even more downside pressure in the very short run.